from a passive investing strategy, let's talk a little bit about how to properly vet a passive investment opportunity and what you think is important to look for when evaluating a passive investment opportunity.
hmm Yeah, and I'm going to lean on you on this as well, because I know you answer questions ad nauseum every day. So you probably have some questions that I wouldn't even think of. Um, but when you're looking at, we'll say an apartment syndication opportunity, the first thing you have to do, I don't know where everybody is on the spectrum right now as far as starting out or level of sophistication, but you need to educate yourself on the key terms that you're going to be reading. Know the terms and definitions, so you have a working knowledge. You know what NOI is, you know what cap rates are, you know what P&Ls are and how to read them. You know what a cash on cash return is versus a IRR, and what the difference is between those. Preferred returns, different types of share classes, those types of things. Really kind of dig in and understand the terms before you know anything else in the game. Fees and skin in the game of the sponsors. You'll hear that a lot too. What are the sponsors charging, and how much will the sponsor be putting in to the deal of their own money? It's fairly common for a sponsor to put anywhere between 3 and 15% based on the size of the deal. So those are important things. What types of fees are they charging? There's all kinds of fees. There's acquisition fees. There's loan or debt signing fees. There's disposition fees when you go to sell. There's construction management fees, and those can get pretty exorbitant depending on the size of the rehab budget and the heavy lift, or if the value add is a heavy lift. There's organizational and operational fees, all kinds of fees. So make sure that you ask those questions. And most importantly, you want to evaluate the sponsor or the general partner that's bringing you the deal. How many deals have they exited? How long have they been operating? Did their performas meet expectations on their exit? Will they show you those P&Ls so you don't just see like the 4 lines that they send you? Will they show you the P&L so you can evaluate the returns yourself? Did they have any deals go bad? And then what guardrails have they put up now so they don't repeat that mistake in the future? Really, any questions you're asking and they say, well, we can't give you that information, that's generally a red flag, depending on what information you're at. If you're asking for their social security number, then that's a little too much. But for most questions, they should be able to answer them for you. Look at their pro forma and their numbers. Is their underwriting realistic? We're in a historic bull market right now. Are they still planning for a lower exit cap rate or a 10% rent bump? Like rents grew 11% last year. That's not tenable. So if their pro forma says that rents are going to grow 10%, that's a red flag. Do they have a clear plan for their value add? And that's going to create that margin, that equity to give you the profit in the deal. What's their waterfall structure? How do you get paid?
Yeah.
And one of the things that I love about passiveinvesting.com is most of their deals, their preferred return come to you as a return of is a distribution and not a return of capital. And Danny can talk a little bit more about that, but that's important. And the last thing I'd mention is, what are your voting rights? Worst case scenario, the sponsor goes off the rails. Is there a way to remove the sponsor? Those are things that I look at generally.
Yeah, I think all of those are great. A couple that immediately come to mind, if I was to evaluate any investment, and I always kind of think about it as like, you go and talk to a stockbroker, right? And they're trying to sell you on a stock. If you typically ask them, how much of your own personal money are you putting in? They usually don't have a good answer, or they probably haven't put any money in. And so my first question, just being a financially minded person, I would always ask, how much is the GP putting into the deal? That would be a great starting question. My other, belief around this is real estate investing is not medicine. It is not complicated. There are issues that come up but it is nowhere near, you know, being in an operating room and having a patient's life on the line. So, you know, take a breath. It's not rocket science here. It's not medicine. It is just investing. And I would urge someone, if you're evaluating a sponsor or looking at an investment opportunity and you cannot understand their business plan or answer all of your questions in about 2 to 5 minutes, where you have a good feeling that you know what's going on, you know what their approach is and their philosophy, then I would walk away from that group. Again, real estate is not complicated. It's very straightforward. Um, if if you are looking at, you know, quality investments that are conservative in nature, um, it's very simple and straightforward to explain and have you understand. And I think that's a requirement of a good GP, to be able to explain what the critical business plan is and how it's being supported and how you are mitigating unnecessary risks. And so that would be my last piece of advice is, if the conversation drags on way too long, and you leave that confused, then that group is not for you.
Yeah, Danny. One of the things when I'm talking to docs, and I fought it my whole life, is we get into analysis paralysis. And a lot of it has to do with that's what we're taught, right? I mean, if we're not 100% correct, I mean, literally, people could have bad outcomes. So
Yep.
we're taught to just really, really interrogate opportunities pretty well. And what I would say is, like Danny said, learn enough to prove the concept and jump in. If you need to be 100% about every investment before making the decision to invest, you're really going to miss out on some good opportunities is what's going to happen.
Right.
If you've read about the space and you have a very good idea of what's going on in the space, you feel it's a good deal, jump in. You don't have to spend your life's earnings, but I'd say put enough in that it may hurt a little bit if you lose it, because it'll keep you interested and you'll learn. And where your money goes, it's where your mind follows generally. Investments are, look at every investment as an opportunity for an education as well. And the more knowledge and experience you gain, the better investor you're going to be.